Oh man. Okay, so you're not losing your job fast enough. You have to lose your job faster. The Federal Reserve is going to be very upset if you don't lose your job faster. The Federal Reserve needs you to lose your job so that inflation will go down, so that we can get into a deflationary cycle. Because the Federal Reserve wants to get interest rates down to about 2% on a long-term basis. Right now we're north of 9%, nearly 10% for the last year. And we can't have that because that's very high. And so in order to get inflation down, the Federal Reserve is very aggressively increasing interest rates. And the hope there is that businesses and consumers won't be able to access credit, which is about 97% of our economy. So if they can't access credit, if they cannot get a loan to make payroll, to grow, to buy office space, to buy that machine that they need to operate, then they're going to have to cut cost in order to achieve what they want to, in order to continue to be a operating business and profitable. So as you may know, the highest cost that a business has in most cases is you, the payroll, headcount, employees. And so if they can't afford to operate, the first thing they're going to have to do once they start cutting costs is cutting people. And if they do that, more people will be unemployed. And that's the goal of the Federal Reserve. As people become unemployed, they start to hold on to their cash. They stop spending. And as people see that happening, as others see that happening, those who didn't lose their job, as they see that happening, people being afraid of losing their job, they also start to hold on to cash, start to save, stop going out to be entertained at movie theaters, amusement parks, or to hotels, or traveling the world. And that's exactly what the Federal Reserve wants. Because that means that people are not spending and demand goes down. And right now, because supply is so expensive due to the pandemic, there's an imbalance of supply and demand. There's too much demand, too little supply. And so prices have gone up. That's how we get inflation. Your money is worth less. You can buy less with your dollar. And so inflation has risen to 10%, 9%, whatever the case is, way too high, way above 2%. The Federal Reserve needs to get this back under control. Otherwise, we risk going into an inflationary spiral that then leads to hyperinflation and then the collapse of the US dollar, and then the entire world economy collapses as well. And we cannot have that. So we need you to lose your job so that you have to hold on to all the cash, and then your fellow workers, your fellow laborers have to be afraid and won't demand higher salaries, won't demand higher wages. They'll be happy with their wages. In fact, if they even lose their wage, if they have a cut in their wage, so long as they don't lose their job, they'll still be happy because they have a job, unlike others in the economy. And the Federal Reserve wants to get interest rates so high that there will be 3 million more people who lose their job in the next year. 3 million more Americans will lose their jobs. And if they don't do it well, that could be 5 million Americans losing their job if they overdo the increase in interest rates. But that's a secondary concern. If that happens, we'll deal with it then, they say. We need to get inflation down now. And so we can't take any chances of that not happening. And so yesterday or today, we get back the jobs report for September, and unemployment didn't go down. And so I wake up this morning and the stock market is going back down again. I'm down 10%. Everything's red, and everyone's going crazy online because their stocks are going down again. Again, line doesn't just go up. Everyone thought line goes up in 2020, 2021. Great time to be in the market if you're just looking for the momentum and routing the line up. It's an even better time right now to be in the market because you get to buy the discounts, but people don't see that. They're afraid. And so they're thinking, why won't you people lose your jobs faster? Quit. Do something. Go curse out your boss. Lose your job, please, so that we can get back to normalcy, get back to the good old days of 2%, 4% inflation, where the stock market is happy because businesses are borrowing more money and investing that into their operations and their people and growing fast. We don't have that anymore because people are spending too much money. There's too much demand, too little supply. We need people to lose their jobs so that they spend less money, so that businesses get less money coming in, and so that they fire more people. And then those people who lose their jobs spend less money and demand less in wages. And then because they can't spend money, the businesses that depend on their spending don't get more money, don't get the money that they expected to get. And then they have to cut more cost, which means fire more people. And then we continue in that deflationary spiral. And hopefully we don't spiral out of control, because that's how we get into depression. That's what happened in the Great Depression. That's how we got so low at that point, where it was incredibly hard to recover. That's the hard landing that we want to avoid. We don't want a deflationary spiral. But we're going to risk it because we need to get inflation under control. And others say to the Federal Reserve, hey, maybe you don't need to increase interest rates so aggressively. Maybe it's just because the supply is so low due to the pandemic, the once in 100 years pandemic that we just had. Maybe this isn't the same playbook as always, as in 1970s, 1980s. Maybe be more human, think more holistically. Let's just see what happens, wait a few quarters, go a little slow, get back down to raising interest rates by 25 basis points instead of 75 and 100 basis points every few months. Just take it slow, and let's just see how it rides out into 2023. But nope, Federal Reserve says no. We were wrong before about inflation being transitory during 2020, 2021. We thought this is going to be temporary, and we were wrong. And now we look stupid. So we can't do the contrarian take a second time and look stupid a second time. Fool me once, shame on you.
If fool me, we can't get fooled again.
So we need to do whatever we can to get inflation down. If that means crashing the housing market, crashing the stock market, crashing everything that exists, all those markets, the job market, if that means crashing it all, we're going to crash it all, and we're going to do it with a smile, and you're going to accept it and be happy with your less money coming in. You're going to demand less raises, you're going to get less promotions, you're going to be happy to just have your job, because we want you to lose your job, but some of you just won't lose it because we need to keep you around. But for those millions of you out there, those 3 million of you, 5 million maybe, of you who might lose your job, please do it faster. Please lose your job now, yesterday, so that we can get back. You're making us be bad to you. You're making us be evil. We don't want to be evil. And so we need you to play along. Stop getting higher wages. Stop keeping your job. That's the plea from the Federal Reserve. And I don't know if you're going to be happy or if we're all going to make it through this. It could get very dark. We could get back to 1921. To those times, a very, very dark and deep recession, a great recession like 2008, 2007, 2009. We could get back to those times, maybe even depression. The Federal Reserve wants a soft landing, but at this rate, it's unlikely. There's a very good chance that it's going to be a very hard landing. Yeah. Well, I can't say I hope you enjoyed this video. It's not really a video to enjoy. It's more of a warning, alert that times are very tough right now, as you know, and they're going to get worse before it gets better if the Federal Reserve has its way. But of course, right now the job market is way too strong. It's fighting back. It's not relenting. And the Federal Reserve says, hey, it's going to be you, or it's going to be us. And we would prefer that it's you. That you lose your job, so that we can say we handled this. Inflation is back to 2%. It's going to be pain, but it's necessary. Some of you are going to die. Some of you are going to get awfully sick and won't have enough funds to cover healthcare. And we're sorry for that, but not sorry. I hope this message finds you well, and if it did, consider liking and subscribing. I'll see you again next time.